This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Friday, June 26th, 2026. I'm John.
And I'm Mary. We are your smart friends on the go. Let's get right into it.
Here is the gist view for today. The artificial intelligence boom just broke out of the software layer. It is violently repricing the physical world.
And you are paying for it. Apple just raised MacBook and iPad prices by up to 54%. That is a $300 premium. Microsoft tacked $150 onto its Xbox consoles.
Why? Data centers. The explosive demand for artificial intelligence data centers is draining the global memory supply.
Apple CEO Tim Cook told the Wall Street Journal this shortage is unprecedented in 40 years. Let's look at who benefits here. Tech giants are passing the infrastructure bill directly to you, the retail buyer. They want to protect their profit margins.
They are betting on their locked-in ecosystems. They figure you have to buy their gear anyway. But Wall Street isn't convinced.
Right. Investors immediately punished both companies. Apple stock dropped over 6%. Microsoft fell over 3%.
Shareholders want proof of pricing power. They don't just want algorithmic hype, they want to see cheap infrastructure. If tech giants can't secure that, the investors walk away.
Exactly. It is a massive flex by big tech. They force the cost onto buyers. They win margin protection. We pay the toll.
Let's move to the global overview. Speaking of artificial intelligence limits, the models aren't magic money machines either.
Far from it. A new Wall Street Journal study looked at large language models trying to time the stock market. Over extended periods, they fail to beat traditional benchmarks.
Think of it like an airplane autopilot relying on an outdated map. When the macroeconomic weather changes, the models can't adapt.
This exposes the real temporal limits of algorithmic finance. The hardware costs billions, but the software still can't predict the future.
Switching gears to United States politics, the operational stability projected by United States Democratic moderates is facing a huge stress test.
The United States Supreme Court just handed the incoming administration virtually unchecked deportation powers.
The ruling is Milan versus Doe. In a 6-3 decision, the court ruled on temporary protected status, or TPS.
TPS is a humanitarian program. It grants legal residency and work permits to migrants from unsafe countries.
Now, the government can revoke TPS without any judicial review.
Who loses here? Roughly 300,000 Haitians and 7,000 Syrians legally living in the United States. They now face imminent deportation.
The power shift is absolute. The incoming executive branch gains total control over these vulnerable populations. The courts are cut completely out of the loop.
Let's cross the Atlantic for the European perspective. Naples is giving Milan a run for its money.
Historically, Italy's industrial north dominated the economy. But the Mezzogiorno, the traditional name for southern Italy, is breaking old habits.
It is ditching its reliance on state handouts. Instead, private capital is flowing in. Apple's Developer Academy in Naples is a huge catalyst.
The shift toward high-value tech is working. Italy's overall GDP growth is projected to be sluggish, under 1% for 2026, but Naples is surging ahead.
We need to be clear, though. The baseline for southern Italy's growth is very low. Small gains look like massive percentages compared to Milan's established wealth.
Still, it is a big shift in resource flows. The private tech money is finally looking south.
Moving to Germany, the Christian Democratic Union, or CDU, is pushing a major fiscal reform. The CDU is Germany's primary centre-right party.
Party leader Friedrich Merz and several state premiers want to enforce a strict rule. They call it Wer bestellt, bezahlt.
That translates to who orders, pays. If the federal or state government mandates a local service, they have to fully fund it.
This is a textbook power realignment. Right now, lawmakers pass bills and force local towns to foot the bill.
This new rule structurally forces lawmakers to eat the costs of their own legislation. It stops unfunded mandates dead in their tracks.
Finally, a quick note on corporate power from the Centre for Economic Policy Research. They looked at Glassdoor employee reviews to measure organisational capital.
That basically means team cohesion and corporate culture. The finding? The CEO accounts for roughly 1/3 of that capital.
When a CEO leaves, cohesion drops fast. Human leadership directly dictates enterprise value.
So, a company isn't just a spreadsheet. The person at the top controls the glue that holds it all together.
Here is the temperature for today. The tech sector is learning that the physical world bites back, transferring the heavy cost of the artificial intelligence boom directly onto consumer shoulders. Meanwhile, executive power, whether in the United States immigration system or in the corporate C-suite, is consolidating rapidly. It is a shifting landscape where those who control the hard infrastructure and the legal mandates hold all the cards, leaving everyday people to navigate the friction.
If you enjoyed having us as your smart friends on the go today, we'd love to stay in touch. You can subscribe to The Gist's daily newsletter completely for free. Just tap the link right there in your show notes.
It is the best way to keep your edge. Thanks for listening, and we'll catch you next time.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.